Mark Walters' journey from a quiet upbringing in rural Iowa to the pinnacle of global finance is a narrative of methodical progression and strategic vision. Born in the 1960s, his early life was grounded in the heartland of America, instilling a sense of practicality and diligence. He pursued higher education with a clear objective, earning a law degree from Northwestern University. This was not merely an academic exercise, it was the forging of a critical tool. His initial career as a lawyer provided him with an intimate understanding of contracts, risk mitigation, and the complex architecture of corporate transactions. This foundation in law would prove to be the bedrock upon which he would later construct a vast financial empire. The transition from the structured world of law to the more fluid and dynamic realm of finance was a deliberate and calculated move. He began his financial career at First Chicago Bank. He was exposed to the intricate mechanics of capital markets and corporate finance. This experience was a crucial stepping stone, allowing him to apply his legal acumen to real-world financial problems. He learned how deals were structured, how capital was allocated, and how value was created and sometimes destroyed. It was here that he began to cultivate the network and the knowledge base that would become essential for his future endeavors. Mark Walters' career progression is a masterclass in leveraging one's core skills to climb progressively higher ladders of opportunity. After leaving the pure practice of law, he immersed himself in the world of finance, initially taking roles that allowed him to see the deal-making process from the inside. First Chicago private equity firm. He was not just a cog in the machine. He was actively learning the language of capital. He developed a keen sense for how money flows, how risk is priced, how to identify undervalued assets. This period was crucial for building relationships with influential figures, institutions that controlled vast pools of capital, creating a network of trust that would be indispensable in his later ventures. His transition from a salaried employee to an equity partner, and eventually a founder, was a pivotal moment. This shift marked his evolution from an advisor who suggests moves. In private equity, he was directly involved in acquiring companies, often taking significant operational roles to drive their growth. He was no longer just analyzing the risks detailed in a contract. He was now responsible for managing those risks and creating tangible value for his investors and partners. This hands-on experience in turning around and growing businesses provided him with an unparalleled education in what makes a company truly successful over the long haul, far beyond what any financial model could predict. The founding and leadership of Guggenheim Partners represents the culmination of this ascent. As the chief executive officer, he was instrumental in shaping the firm's identity and its investment strategy. He steered the company away from the herd mentality that often dominates finance, focusing instead on niche markets and complex assets that others might overlook or misunderstand. His legal background gave him the confidence to navigate intricate regulatory environments, while his financial acumen allowed him to spot opportunities for generating steady, long-term returns. He became known for his ability to lead large, complex deals, orchestrating them with a calm and methodical precision that became his signature style. Under his guidance, his role evolved from that of a dealmaker to that of an empire builder. He was no longer just buying and selling individual companies, he was assembling a portfolio of interconnected assets across various industries. This required a different level of strategic thinking, looking at how different businesses could complement each other and create synergistic value. He became a master of capital allocation, deciding where to deploy billions of dollars to achieve the best possible risk-adjusted returns. His career path demonstrates a continuous expansion of scope and responsibility, from analyzing a single legal clause to overseeing a global financial institution with hundreds of billions of dollars in assets under management. The timeline of his early career sets the stage for his eventual rise. The move into private equity in the early 1990s was a significant milestone. It placed him directly in the business of buying companies, improving companies, selling companies. Mark Walters' approach to business development is fundamentally rooted in a long-term perspective. He is not a trader chasing fleeting market fluctuations. He is an investor who seeks to acquire and nurture assets with enduring value. His strategy often involves identifying companies' properties that generate consistent, predictable cash flow. This provides a stable base for future growth and a cushion against economic downturns. He is particularly drawn to assets out of favor with mainstream investors that possess strong underlying fundamentals and the potential for significant improvement. This philosophy guides his investments in diverse sectors. Diagram: central hub labeled Guggenheim, with spokes to sports, media, insurance, real estate. Media, insurance, sports franchises, real estate, all share potential for long-term appreciation. A key element is the active role he and his firm take after an acquisition. Not passive, Walter becomes a catalyst for positive change. It involves more than just injecting capital, installing strong management teams, providing strategic guidance. Furthermore, Walter is a master of building powerful consortiums. Big deals often require more capital and more expertise than any single firm can provide. He brings together high-net-worth investors and institutions. By forming strategic partnerships, he can share financial risk and pool diverse skills and connections. This was shown in his acquisition of the Los Angeles Dodgers. He assembled a high-powered ownership group to secure an iconic franchise, a feat hard to do alone. He looks for synergy across his holdings. Different parts working together create more value than alone. Sports franchises, media companies, cross-promotion, content distribution. Section 4. Quantifying success. Mark Walters' financial milestones. The trajectory of Mark Walters' financial success can be measured by the escalating scale of his transactions and the monumental growth of the firm he leads. In the early days of his private equity career, the deals were smaller, often involving mid-sized companies that required operational turnarounds. As his reputation and track record grew, so did the size of the checks he was able to write. He graduated from deals measured in the millions to those measured in the billions, a clear indicator of the trust he had earned from investors. The growth of Guggenheim Partners from a boutique firm into a global financial powerhouse with over $300 billion in assets under management is perhaps the most significant testament to his financial acumen and leadership. One of the most public and spectacular examples of his financial success is the 2012 acquisition of the Los Angeles Dodgers for a then-record price of over $2 billion. At the time, many analysts viewed the price as exorbitant for a team that had recently been through bankruptcy. However, Walter and his partners saw immense untapped value in the team's brand and, crucially, its future media rights. Their bet paid off handsomely. They subsequently secured a multi-billion-dollar television deal that not only justified the purchase price, but also turned the team into a highly profitable enterprise. The value of the Dodgers has since soared, making the initial investment look like a brilliant strategic move and cementing Walter's reputation as a visionary investor. Beyond the glamour of professional sports, Walter's financial success has been quietly but steadily compounded through investments in less headline-grabbing sectors. The insurance industry, for example, has been a key pillar of his strategy. Insurance companies collect premiums up front and pay out claims later, creating a large pool of capital known as float that can be invested for long-term returns. By acquiring and managing insurance firms, Walter gained control over a stable and massive source of investment capital, which he could then deploy into other opportunities across his portfolio. This steady, reliable engine of wealth generation has been a crucial component of his financial achievements, providing the foundation for his more ambitious ventures. The culmination of these successful ventures is a personal net worth that places him among the world's wealthiest individuals. While the exact figures fluctuate with market conditions, his wealth is estimated to be in the billions of dollars. This immense fortune is not simply a scorecard of his success. It represents the power to influence industries, shape communities, and pursue even larger and more ambitious projects. His financial success demonstrates the powerful compounding effect of patient, long-term investing, strategic risk-taking ability to identify and unlock value where others see only problems. It is the quantifiable result of a career spent mastering the art of the deal and the science of capital allocation. Section 5. Lessons from the top. Distilling Walter's financial advice. Although Mark Walter is not known for giving frequent public speeches or writing books on investment strategy, his career path itself offers a rich tapestry of financial advice for those willing to study it. The first and most fundamental lesson is the importance of building a deep base of expertise in a specific field. For Walter, this was law. He mastered its complexities, which gave him a unique lens through which to view risk and structure deals. Before you can successfully invest in a field, invest in your own understanding of it. Becoming an expert provides a durable competitive advantage. A second key piece of advice is the profound value of building and maintaining relationships based on trust. Finance at its highest levels is a relationship-driven enterprise. Walter's ability to form powerful investment consortiums to attract and retain top managerial talent all stem from his reputation as a reliable and forthright partner. Long-term success is built on mutual respect and shared goals. Your network and reputation are among your most valuable assets. Cultivate them like investments. Third, Walter's investment philosophy champions long-term thinking. In a world obsessed with quarterly earnings and short-term gains, he focuses on assets that can grow and generate value over decades. Sports franchises, media rights, insurance companies. This approach requires patience and discipline to resist fleeting trends. Do not get distracted by market noise. Focus on acquiring high-quality assets and give them time to mature and compound. Finally, a crucial lesson is the necessity of an owner's mindset. Be an active participant in value creation, not a passive bystander. When his group acquires a company, they don't just provide capital, strategic direction, operational expertise, access to their network. Find one area you know well and study it relentlessly. Investing in the stock market. Starting a small business. Deep knowledge helps you identify opportunities for improvement and take an active role in making your investment more valuable. This proactive approach transforms investing from a game of chance into a discipline of creation. An empire of assets. Businesses owned and influenced. The portfolio is vast, remarkably diverse, spanning durable, culturally significant sectors of the economy. He is the chief executive officer of Guggenheim Partners, a global financial services firm, the central hub for many of his investment activities, divisions, investment banking, asset management, insurance services, a powerful platform to deploy capital and structure complex deals. Guggenheim is the engine room of his empire, providing financial muscle, providing strategic intelligence to acquire and manage many businesses. His most famous assets are in professional sports. Controlling owner of the Los Angeles Dodgers, one of Major League Baseball's most storied franchises. Not just a trophy, a business, ticket sales, merchandise, a multi-billion-dollar regional sports network. Ownership group also holds stakes in the Los Angeles Lakers and the Los Angeles Sparks. These bets show belief in live sports as premium content, fan loyalty, lucrative media rights deals. Walter's influence extends into media and entertainment stakes via Guggenheim in Billboard. The Hollywood Reporter investments tied to intellectual property and content creation, synergies with sports franchises. A vertically integrated ecosystem, content created, promoted, and distributed across platforms. Content is the kingdom. Beyond sports and media, insurance, real estate acquisition, and management of large insurance companies. These provide investable capital, the financial bedrock, active real estate investments, properties and development projects, tangible assets offering steady income streams, a hedge against inflation, diversifying his portfolio and adding resilience. By 2005, he was co-founding and building monumental funds. Those funds focused on specialized assets like sports, media. The landmark acquisition of a major sports team in 2012 brought him into the public consciousness. The continued expansion of his firm's interests into 2019 and beyond demonstrated the scale of his ambition. Section 7. The Enduring Playbook, Clear Takeaways for Lasting Growth. In conclusion, Mark Walter's career provides a clear and compelling blueprint for building lasting success: discipline, foresight, strategic partnerships. His journey from a lawyer in Iowa to a global financial titan was not marked by reckless gambles, but by a series of deliberate, well-calculated moves. He demonstrates that a deep understanding of a foundational skill, in his case, law, can be a powerful springboard into other fields. The primary takeaway: mastery. Before you can win the game, you must first learn the rules better than anyone else, and then use that knowledge to identify opportunities that others miss. This dedication to expertise is the first pillar of his success. The second lesson: patience and a long-term perspective. Walter consistently favors assets that promise steady, sustainable growth over those that offer quick but fleeting profits. His investments, sports teams, dedicated fan bases, media companies, valuable content libraries, insurance firms, stable cash flows. This teaches us to resist the allure of short-termism and to focus our energy and capital on building things of enduring value. True wealth, as his career shows, is not made overnight. It is compounded slowly and deliberately over many years, like a great forest growing from a handful of carefully planted seeds. Third, the importance of collaboration cannot be overstated. Walter rarely acts alone on his largest ventures. He is a master at assembling powerful groups of investors and experts. A collective of diverse talents and resources is far more formidable than any individual. This highlights the lesson that success is a team sport. Building a network of trusted partners, sharing risks, leveraging complementary skills are essential for tackling ambitious goals. Whether in business or in personal finance, cultivating strong relationships and knowing when to collaborate can unlock opportunities that would be impossible to seize on your own. Ultimately, the playbook is deceptively simple and universally applicable. It boils down to a few core principles. Learn your craft inside and out. Build a reputation for trust and reliability. Think in terms of decades, not quarters. Surround yourself with talented people who share your vision. Mark Walter's path shows that by adhering to these steady, time-tested rules, one can build an empire of value. For anyone seeking to improve their own financial future, the takeaway is clear. Adopt a long-term mindset, invest in what you understand, and be patient. Success, in the end, is a marathon, not a sprint. Each step was a logical extension of the last, a testament to a career built on strategic foresight rather than speculative gambles. The key years mark a steady, almost inexorable climb.